Hello, good afternoon. You've tuned into your stocks in CNBC-TV18 and I'm Vinny Motiwala. As of now, the screen that we're looking at in terms of the broader markets, managing to hold on to some bit of a green is what the Nifty mid-cap is doing. But like you can see, the benchmark indices are 23,199 to 23,200 is what the Nifty is holding on to. So yes, Nifty recovered from the day's lowest point, but yes, 23,200, will it manage to hold on to that in the second half of the trading session? That's going to be important to watch out for. Nifty Bank clearly under pressure today, underperforming today, down 1.65% in trade as of now. So Nifty Bank is where we're seeing the pressure coming in. Nifty IT also continues to be under pressure, down 2.5% and more than that in trade. What's the green spot today on the screen? We have realty names that are doing well. We have Nifty Metal that is managing to hold on to gains. So yes, that's why we're seeing some bit of a green coming in. An advanced decline ratio today as of now is fairly in the favor still of declines versus advances. So yes, that's going to be interesting to watch out for as of now. They're nearby, close by, we would see them merging at some point of time, but as of now, it's more in the favor of the declines versus the advances. But that's how the market setup is looking like. But this is a show where we solve all your stock-related queries. And to solve all those doubts today, we have our experts joining in with us. We have Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Lilladher, joining in with us this afternoon. Good afternoon, ladies. Thank you so much, as always, for joining in with us. And happy Friday to both of you all. Hoping it turns out to be a happy Friday by the end of this trading session as well. But let's start with the queries and make our viewers happy. They have a whole host of queries that have come in as well. So let me get started with the first query for today. We have the first query on Reliance today. Now, Swapnil Kulkarni, who's writing to us from Mumbai, he's holding 600 shares of Reliance Industries at a price of 1,480 rupees, making some bit of a loss right now. But he wants to know the future prospects in terms of his investments. China, Reliance reported their numbers yesterday as well. Seems like a decent number because retail and O2C managed to do well for the company. So what are the fundamentals looking like for Reliance Industries? Today, 3% uptick is what we're seeing also.
Yeah, the valuations are pretty attractive at current levels. If you look at EV by EBITDA, for the current year also, it's just slightly lower than 10. And on a PE basis also, it's about 20 times. So for a company, this size of a company, which has done so well in the third quarter, across all parameters, in fact, you mentioned two verticals. I think, the OTC did very well based on the GRMs that were higher. You had retail volume that did well. They're gaining market share. And Jio, of course, I believe, with the addition of 11.2 million subscribers is doing pretty well. So I think Reliance is a stable stock to hold in your portfolio, and it's a hold for the long term.
Hold for the long term, no doubt about that. But Vaishali, on the technicals, what are we watching out for in terms of Reliance Industries? From those 52-week highs or 6 months ago, also it was around that 1,600 level. Today at 1,300, what is your view coming in on this one? Can the viewer actually look to add more also right now?
Yes, good afternoon. Very good afternoon, all of you. In fact, I was just going to say that actually, as you rightly said, from 1,600 making a low at 1,200 levels. And technically also it was just satisfying the criteria because 1,200 was a very crucial support. So even before the results were out, I think it was making a very good buying opportunity with 1,200 as support. So now that you're saying that this gentleman has bought it around higher levels, it's worth averaging out. Keep 1,200 as support level. So you may add more in tranches. If there is a dip from here on, keep 1,200 levels as a crucial support and continue adding to lower down your cost and enjoy the ride when it starts.
Absolutely enjoy the ride when it starts. That's what you should watch out for. And look to average also is the word coming in from Vaishali. Let's move on to the next query. We have Rohit Chawla, who's writing to us from Pune. 200 shares of Gail is what he's holding at a price of 193 rupees per share. Also, he has one more stock that he wants to know about is Tata Power. 100 shares of Tata Power he's holding at a price of 415 rupees per share. So Gail, he's bought it at 193 where he's making a bit of a loss there, and Tata Power also he's making a bit of a loss. So he wants to know whether he can actually continue to hold this or maybe book out the losses and look at something else. Shahina, Gail and Tata Power, on the fundamentals, what are your thoughts?
Yeah, after the correction that both these stocks have given, I think fundamentally they have reached attractive valuation levels. If you look at Gail, it's just about 1.4 times book and it's 9 times 1 year forward P. While I believe that it is consolidating at current levels and this stock is going to be a steady performer, I don't see it running away. At the same time, it has tied up, for a 5-year LNG contract with Qatar, which I believe will give it some stability in terms of the new contract it signs with its clients, which actually, the clients were directly, some of the large corporates were directly tying up for their requirements, which actually saw some softness in their numbers in the last quarter. I believe over the longer term, it should stabilize given this factor. The second one, of course, you mentioned Tata Power. Tata Power, there also last quarter, they didn't do that well. The stock has corrected because of the monsoons, the way it behaved in the first half. But I believe going forward, they have got very good plans in terms of expansion. As you've heard recently, they have also bid for the discoms in Lucknow. I think this as well as their transmission business, which is doing pretty well. Power generation also should improve going forward in RE. So I think both these factors make these stocks steady performers for the longer term. I don't think you can really trade in them and make money for the shorter or medium term.
Okay. Long term, good story that comes in for both these plays. But Vaishali, on the technicals, what's your word coming in? China also started by saying, both of these have corrected significantly in the last 6 months. So, does it become an attractive bet right now? And maybe the viewer should continue to hold this.
I would definitely agree because first of all, these are all frontline stocks and market. This is very regular that we see correction on and off. After a very long time, we've got this opportunity that the major index has been corrected by more than 10%. And the stocks, of course, individually, we are seen at good support levels right now. So I guess one should start accumulating because this is not a reason to panic. These are good, healthy stocks. And I would say, let's talk about Tata Power. Technically, I would say 340 acts as a good support. I think it's done its corrective round, and in that view, I would say add more at these levels. And likewise, even Gail. So I would say Gail also is looking very favorable at these levels. I would say 165 is a support. Even on the weekly chart, if I'm seeing, if it has to go for a further corrective move, 165 should act as a very prominent support. So add more at these levels. And along with Gail, may I suggest I do like ONGC also because that's also showing very strong signs of reversal. So I would say yes, go for it.
Okay. Yes, go for it. That's a word coming in from Vaishali also. ONGC is also something that she mentioned as well. On the other hand, let's move on to the next query now. I beg your pardon. We have Hero MotoCorp. That's the next query which we'll talk about. Ankush Jain, who's writing to us from New Delhi, he's holding 30 shares of Hero MotoCorp at a price of 1,500 rupees per share. Wants to know whether he should book his profits or, continue to hold this, stay invested in this one. 1,500, so making a good amount of profit here is what we're seeing. Invested at 1,500, stock is at 4,089. Fundamentals, Shahina, what are the Hero MotoCorp looking like? This two-wheeler vehicle, obviously, in terms of volumes and trends that are shaping up, that's going to be key to watch out for.
Yeah, so precisely because of that, what I believe that it is better, in my view, to say take 50% profits as of now and hold the remaining 50% for longer term. I am recommending booking part profits is because I believe in the coming year, first quarter of next year, I see too much of competition coming up in this space. And because of which, I believe over the medium, say maybe the next 1 odd year or maybe 2 years, you're likely to see both margins remain under pressure and also thereby, the stock consolidating. I would say hold 50% for the longer term because valuations after the corrections have become very attractive. Pure valuations, if you look at it, it is 11 times EV by EBITDA 1 year forward, price to book about 4 times. And the balance sheet is, of course, very strong. So I believe because of these factors, the remaining you can hold for the longer term.
Okay. And Vaishali, your view coming in on Hero MotoCorp, where the viewer is already making good amount of profit. What would you suggest?
I would say continue holding, keeping a trailing stop loss of 3950 because currently it's at a very good support level. And in fact, whole of auto sector is showing exhaustion in selling. So I would say that yes, these are the levels where actually if it's a long-term perspective, I would definitely say hold. But if this person is already having it, 3950 is the level to keep as stop loss and continue holding.
Okay, that's a view on Hero Motor. Let's move on to the next query. Now, Sheetal Kapoor is writing to us from Mumbai with an investment query. She wants to know if she should invest in auto ancillary stocks and ask which stock would be the most attractive right now with valuations or fundamentals. What would the bet be? Shahina, let me take this to you first.
Yeah, so in auto anks, I think it looks interesting at current, for buying for some of the stocks currently. I would say you could go in to buy something like a Una Minda. I think their valuations are very attractive, and they've got a very strong balance sheet, good growth plans. So I would start accumulating Una Minda. Also, the other Minda group, Minda Corp, there also I think while valuations are a little expensive, so I would prefer purchasing that at a slight dip. But there again, they have got good plans. They have, they are growing through acquisitions. I would believe the longer term looks good even for the EV segment for the Minda. And another one I would like is Sona BLW. I think there again, valuations are a bit expensive. So I would prefer, buying it on dips. But there again, the business prospects remain strong.
Okay, and Vaishali, any stocks that you are looking at in the auto ancillary side that would be attractive at the current levels to buy in that space?
So I would say Samvat and Motherson, because that's also one of the frontline stocks. So that also has taken a good beating. So that would be one of the stocks. And I would also suggest Tata Elxsi right now, along with that, even tire stocks, if you may call it as an ancillary. So besides, as Shahina has recommended, Minda Corp and all. So these are the stocks, along with the automobile sector, these should participate as well. So yes, I would recommend all these stocks.
Okay, thank you so much for that, Vaishali, as well as Shahina. Those were the stocks that y'all can buy if y'all are looking to enter in the auto ancillary space. Both of them have given a couple of names there. But on that note, we're going to slip into a very short break, viewers. But don't go anywhere, because after the break, we'll be back and we'll be taking more of the stock-related queries. So don't go anywhere. Welcome back. You're watching Your Stocks on CNBC-TV18. Let's move on to the next query for today. We have Rahul Taneja, who's writing to us from Kolkata, holding 200 shares of ONGC at a price of 140 rupees per share. Wants to know and ask whether he should continue to hold this or look to sell at the current levels. Bought it at 140, so making a decent amount of profit. Vaishali, let me take it across to you, because you did mention this name before as well. Now, this viewer is making a profit here, so what should the viewer be doing now?
I would say, actually, yes, my view is positive for a longer term perspective. And we have already seen, in fact, again, as a disclaimer, we have recommended this. As I mentioned, technically 230 really acts as a support. But now that it's already sitting on profit, I would say keep 245 as a stop loss and continue holding, because we are looking at a projected target of 290 to 320 from here on. So 245 should act as a stop loss, 245, 250, and continue holding for higher targets.
Okay, 290 to 320 is the target that Vaishali is keeping. On the fundamentals ONGC, Shahina, what is that looking like?
Yeah, so fundamentals also back the positive view of technicals. Valuations are pretty attractive. At 4.5 times 1 year forward EV by EBITDA, it's extremely interesting. Also, if there is any changes in terms of the the taxation windfall tax by the government, there also it benefits. There is increased production likely coming up in in the coming year from the eastern gas fields. So you're going to have both realizations as well as volumes up over the coming period. So I think valuations will remain interesting and attractive. So it's a hold and a buy.
Okay. Hold and a buy, that's coming on ONGC from Shahina. Let's move on, and this is an investment query again that we have. Shruti Mishra, who's writing to us from Pune, wants to know on IT stocks, and she's asking if if she could look at any one of these IT names to buy currently at the current levels, what is looking attractive? Shahina, let me take it across to you. While Infosys did report a decent number, but commentary, those wage hike issues is something that is keeping the stock under pressure. And today we're seeing IT as a whole is also under pressure. So Shahina, what are your thoughts on the IT pack? Any one stock if they had to look at, what would it be?
Well, yeah, if one stock you have to look at, it has to be a TCS, which is the largest. And then the numbers were also in line with expectations. They had a very good deal win during the quarter. And also in terms of their guidance was pretty robust. Uh, so I think, across the board, TCS remains interesting. While it is interesting to buy it at current levels, if you really want to make decent money, it is better to buy it on dips since it's your first pick between, say, 3,800 and 4,000. So it gives you a better return. Also, if you want to add another stock, a smaller stock, maybe you could look at something like a Root Mobile, which is, which is doing pretty well in the CPaaS space, IT solution space. And there, I believe the numbers are, they're doing pretty well in terms of growth in profits also. Valuations there, I believe, have started to look attractive after the big correction that we saw. So I think Root Mobile could be another one stock you could add.
Okay. And Vaishali, any view coming in on your side on the IT stocks? Which names would you be looking at?
So I would choose LTI Mindtree also because the stock, if you see, it has seen a good corrective move, and we did see upward move coming in, and again it's consolidating. So not in a hurry, keep accumulating because 5,600 is the support. So I would say wait for good support level so that your risk reward ratio also turns out favorable. And I'm looking at the target of 6,500 to 6,700 to start with from here on.
Okay, keep an eye on those levels over there for LTI Mindtree as well. That's the suggestion coming in for IT stocks from Vaishali. Next query is on NTPC. Now we have Kamal Sharma, who's writing to us from Odisha. He's holding 80 shares of NTPC at a price of 120 rupees per share, so almost more than tripled his returns right now. 327 approximately is what the stock is trading at. Wants to know whether he should continue to stay invested in this one or book out his profits. Shahina, you.
He should, in my view, continue to hold. They have got a lot of plans, also planning to, expand in a big way in nuclear, which could be the growth driver for the medium to longer term. While we saw a bit of softness in the first half, I think going forward with capex of about 22,000 crores for the year, I think the second half will be better, both in terms of realization as well as in terms of volumes. So it is a hold at current levels.
Hold at current levels. That's the view coming in from Shahina. Vaishali, what's your view on NTPC? How do you see it moving from here on? The viewers, making profits. So is it time that maybe you could just look to exit and enter something else?
I would not say so. In fact, I would say rather add at these levels because all these stocks have witnessed a very good corrective move. And today's this weekly candle also I'm looking at, I think the exhaustion and selling pressure is done with. So I think continue holding, at least look for a target of 380.
Okay. Look for a target of 380. That's a word coming in from Vaishali for NTPC. Let's move on to the next query. This one is on Vodafone Idea. Now, this is a fairly active stock that we see coming in terms of volumes, but it's a very small in terms of amount. Viewer, we have Komal, who's writing to us from Bihar. She's holding 500 shares of Vodafone Idea at a price of 10 rupees per share. Stock is currently at around 9 rupees. Wants to know the future prospect of this one. Shahina, on the fundamentals, Vodafone Idea, what are you saying? What are your thoughts?
Well, on fundamentals, it's on a very shaky wicket. Balance sheet is very, very stretched. And while, the promoters is a strong group, they have got good fundraising program in place. Government is trying to, help them by, giving them some set-offs. But if any point in time they try to improve the balance sheet and raise funds, the dilution on equity will be so huge that I believe, it will negate any upside. So the stock will continue moving in this range. So I would prefer that, she books and she moves to some stronger stock and hold it for the longer term. Even in the same space, you have something like a Reliance, which eventually you're going to get Jio. So you could look at that. You could look at Airtel. So you could even look at some of the other tower companies. But I think Vodafone, you're going to see a consolidation at current levels.
And Vaishali, your view quickly on Vodafone Idea?
Definitely. So I actually personally would definitely suggest Bharti Airtel or Indus Towers to start with. But these days I see a lot of buying interest coming in Vodafone. So purely on technical terms, I would say 8 is the support. So if this person has bought at rupees 10, I think keep 8 as your stop loss. And the way the volume has been picking up, I think this stock can go back to its a cost price of rupees 10 and perhaps go higher to 12. So 8 should be the stop loss and hold with patience.
Okay, that was the last query for today. So thank you so much, Shahina, as well as Vaishali, for joining in with us on the show as always, and a happy weekend to you as well. But with that, we're absolutely out of time on this edition of Your Stocks on CNBC TV18. Thank you so much for tuning in. We're leaving the Nifty just a tad bit below 23,200 mark. Don't go anywhere. Closing bell will take the action forward.